AI is everywhere in investing right now, and too many beginners are using it the wrong way. If you rely on these tools without understanding their limits, you could risk your money without even realizing it. Today, you'll learn the 3 biggest mistakes new investors make with AI tools based on how people are actually using them in real markets and how to avoid those mistakes yourself. AI has moved from hedge funds and banks into the hands of everyday investors. Platforms that use AI to help make decisions with investing are now widely available and easier to use than ever before. There are now tools that help you scan earnings reports, summarize financial news, test trading strategies, and even ask natural language questions like, what are the top dividend ETFs right now? Or how did my portfolio perform last month? Tools like FinGPT, which is open source and constantly updated by developers, are trained on public financial data like SEC filings, company news, analyst forecasts, and macro reports. OpenBB is another example. It's free, lets you dig into stock performance and financial metrics, and works for people who want more control over their analysis. Even tools inside ChatGPT can connect to financial APIs, pull real-time market news, or analyze earnings calendars. But access to these tools doesn't mean you'll make smart moves with them. And that leads us to the first mistake. The first mistake is blindly trusting what the AI tells you to do, especially when it comes to price predictions or trend forecasts. A lot of people see a model suggestion and take it as fact. For example, a user might ask an AI tool, is Nvidia going up next week? The AI, trained on past stock patterns, analyst sentiment, or earnings results, may respond with something like, based on current sentiment and recent performance, Nvidia could rise 3 to 5% in the short term. That sounds confident, but that doesn't mean it's accurate. Why? Because AI doesn't know the future. The market is not something you can predict with precision. It's full of unknowns. Models trained on historical data aren't built to handle surprise events like a sudden interest rate change, a poor earnings report, or a global news event. If you treat an AI forecast as a guarantee, you're likely to take on too much risk. That often leads to large trades placed with too much confidence and no exit plan. Some investors go all in on a stock just because the model shows a positive outlook. Then when the stock drops, they're stuck with losses they didn't plan for. This doesn't mean AI isn't useful. It means you have to know what kind of answer you're getting. Most AI tools don't generate hard predictions. They're giving you possible scenarios based on recent patterns. The right way to use them is to treat their outputs as signals, not decisions. If a tool says bullish momentum is building, your next step should be to look at volume, check news catalysts, and ask what the risks are. It's a piece of your analysis, not the full picture. The second mistake is not paying attention to the data that feeds the AI. Many people use these tools without asking where the information comes from. That's a problem because if the inputs are wrong or biased, the output will be too. This is especially common with sentiment-based tools. For example, some ChatGPT plugins and GPTs use data from news headlines, Reddit posts, or social media chatter to tell you how people feel about a stock. If a stock is trending or getting a lot of attention on X, the tool may flag it as bullish sentiment. But this doesn't mean the company is performing well. A lot of the noise online is emotional or speculative. If that's the only signal you're seeing, you could be misled into thinking a stock has strong fundamentals when it doesn't. FinGPT and OpenBB are more transparent about data. With OpenBB, you can actually choose your data source. You can look at analyst ratings, SEC filings, valuation ratios, or custom technical indicators. With FinGPT, you can check which training sets the model used and even fine-tune them if you have the skills. But even then, you still need to know what kind of data you're looking at. Let's say you're comparing 2 companies. One has great analyst sentiment and is often in the news. The other has solid cash flow and consistent earnings, but doesn't trend on social media. A model trained on headlines might favor the first one. A more fundamental data set might favor the second. If you don't know how the AI gets its signals, you won't know what kind of bias it might have. This is why the best practice is to always check what's behind the recommendation. Ask what data set is being used. Ask whether the model is using current financials, trailing performance, or crowd opinions. If it's not clear, don't act on it without doing your own review. That one step could keep you from following hype signals or chasing risky trades that look better than they are. The third mistake is trying to use advanced AI tools without understanding the basics of investing. Tools like OpenBB let you run backtests on strategies using decades of market data. You can compare different indicators, adjust risk levels, and see how a portfolio would have performed under different conditions. That sounds powerful, but if you don't know how backtesting works, you might misunderstand what the results are showing. For example, you might set up a strategy that looks great on paper. Maybe it shows a 25% annual return with low drawdowns, but if you haven't added in slippage, trading fees, or real market timing, then the result isn't realistic. Many beginners forget to include these, or they accidentally curve fit the strategy by over-optimizing based on past performance. That leads to a strategy that looks good in the tool but fails in real life. The same goes for using TradingView scripts or loading FinGPT prompts without checking what metrics the model is focusing on. If you don't know what the numbers mean, you'll misread the outcome. This is why it helps to learn basic investing principles before trying to automate anything. If you understand how volatility affects portfolio returns, how correlation between assets works, or how interest rates move bond prices, then you'll know what your AI tool is really analyzing. You'll know what a Sharpe ratio means, what a drawdown actually tells you, and why a strategy that works in a bull market might collapse in a sideways one. That doesn't mean you need a finance degree to use these tools, but you do need to speak the basic language of investing. Otherwise, you'll rely too much on the interface and not enough on interpretation. And that usually leads to frustration or giving up on the tools completely when they don't deliver the results you expected. It's also important to note that some tools are more technical than others. OpenBB is free and powerful, but it runs best if you're comfortable with code or command line inputs. You can still use it with their GUI, but advanced features require some learning. FinGPT is open source and flexible, but it assumes you understand Python and API calls. ChatGPT plugins are easier to use and don't require programming, but they're limited by the scope of the APIs and the data access level you have. Many of the most useful plugins for financial analysis, like Portfolio Pilot or Market Sense, offer basic summaries and trend detection, but they don't replace actual models. Also, keep in mind that most of these tools offer free versions, but save deeper features for paid tiers or enterprise level users. If you're just starting out, it's a good idea to begin with what's free, learn the mechanics, and then decide if it's worth paying for more access. In most cases, you can get a lot of learning value out of the free versions of these tools as long as you know how to ask good questions and review the answers carefully. So if you're serious about using AI to improve your investing decisions, start by avoiding these 3 mistakes. Don't treat AI as a crystal ball. Know what kind of data the tool uses and build your financial foundation before diving into complex models. The more you learn, the more value you'll get from the tools and the fewer surprises you'll face when the market does something unexpected. I've linked helpful tools and resources in the description, so check those out. Which AI tools have you used so far in your investing journey? Let me know in the comments below, and don't forget to like and subscribe while you're there.